The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the September 21st. Fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I learned that 2x4 shift, it means you and I can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I am absolutely grateful for your presence here, and most importantly, I'm here to serve you. So feel free to pick up that phone. Dial on in, 877-927-6648. If you can't dial in, no problem. We've got you covered. You can just let those fingers do the walking. You can send me an email, steve@tfnn.com. Inside that subject heading, if you would just please put radio show question, and inside the Tiger's Den, any ping will do. So let's go ahead and get this show started on fantastic, fabulous, fun day Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading up 74 points. 26,731 is the print. So we're getting follow through from yesterday. Something to think about. We've got the S&P up 3, NASDAQ 100 off 6, or Russell down 3. Semis are up 2 points. Trailers are up 41. It's a little bit of a mixed bag out there. Gold's off $8 and silver's up 7 pennies. Light sweet crude is down 32 cents. Leading the charge to the upside, it is a Fairfetch Limited. Fairfetch, or Farfetch. How about that? Imagine we're sitting around a boardroom saying, well, let's come up with a name for our company. And somebody throws out, let's just call it, we're far-fetched. I don't think so. But somebody said, yeah, sounds like a good name to me. Anyways, it's up $10. That's 51%. Apparently not too far-fetched out there. Cool Holdings. That's another one. I could go for Cool Holdings. That's AWSM. That's up 78% or $8. They've cured something, or it's an IPO. Huntington Ingalls Industries, that's up 2.5%, $6. Booking Holdings up $6. IPG Photonics about 6. Tilray Inc., quite a week, off $45 right now, down 25%. GTX Inc., that's a heck of a day, down 92%. That's off $21. That's a stinger. That's a stinger. It's trading out at 187. I don't know what they did, but it certainly wasn't good. Amazon, they're trading off $14 or 0.75% out there. So let's take a look at the requests. We've got a few of them lined up. The first one coming in from Richard. Robert, I apologize. Robert was basically asking a number of questions about the U.S. dollar index. And the most important one is, and I'd gotten directly back to him, but, he brought up, hey, I made some statements yesterday or the day before, I can't recall which it was, about the U.S. dollar index. And so let's pull this up. And remember, when the U.S. dollar index was trading down at about the 93.38 level, what I did, and I posted this inside the Tiger's Den as well, and then we talked about it. I said, hold on a minute here. I know things look terrible on a daily basis. Might have been yesterday. In fact, I'm sure it was yesterday, now that I look at the daily candles. And I said, just hold on a second. Because you and I, or at least I do, utilize these TAS market profiles. I have come to understand and recognize just how valuable they are at being able to identify support or resistance levels that before I use them, I would not have chosen those values and those figures. And since I really started using them, incorporating them into the Rhodes Momentum black box system out here, I was like, man, thank goodness I did that. Because what it allows you and I to do is just focus on the numbers, just simply be objective. Doesn't mean it's going to hold, but isn't it nice to know where support is? Well, in the case of the U.S. dollar index, on a weekly basis, all prices done this week has come down and test support. 93.38. Now look, like everything else, we don't necessarily have to use this right to the tick, the pip, the cent out there. The actual low so far was 93.395. That's really pretty darn fascinating. It's held thus far. If it does continue to hold, then that's it. The dollar either consolidates or bounces from here. The consolidate would be between 93.38 and 95.08. If it busts through that level, then it sets up that Gartley buy pattern. So, and that becomes a potential bullish pattern. Of course, that hasn't unfolded. So all we can do is use that A to B equals CD tool. That's right here on the screen. And remember, this is nothing more than a price projection measuring tool. It's like you and I were sitting around and we're part of that progressive team. What's the girl's name who runs that progressive ads? You know, and they got their little gun mechanism or what have you. Well, we have our own gun mechanism, right, to project price, and that's the A to B equals CD tool. But price isn't going lower until it gets through the bottom of that profile. So the question is, has this bottom? That was really the question that Robert was posing. And at this stage of the game, the answer is, yeah, looks like it has. There's no completed pattern on a daily chart out here, but, oh, I didn't mean to delete that. Oh, thank goodness I didn't, but I can always rebuild it. So did I do that again? What the heck? Let me see if I can do this correctly. There we go. Okay. So, yeah, you know, Robert, at this stage here, I have to say the U.S. dollar index has, has bottomed. It did what it was supposed to do. It came back to a level of support out there. Robert was asking a number of other questions, though, too, about commodities in general. And, is it all based on the U.S. dollar? And what I expressed to him was, again, no opinions on my part. To give you my opinion, even though many times you think what I'm sharing with you is opinion, I like to say that it's real factual information, because we go ahead and we spend the time, we take a look at let the numbers prove the point to us. This happens to be the Goldman Sachs iShares Commodity Index, and the question was really about commodities and the U.S. dollar index. And so if the U.S. dollar index is headed higher, does that mean that's it for commodities? And my response, and you can sort of guess what it was, right, especially when you see this chart, is no, not necessarily. Commodities are going to move higher when you have global money starting to chase them. What will happen in commodities, the days of focusing on one thing, being the U.S. dollar index and just the U.S. screens, is no longer the case during the 1 to 2 p.m. hour. You will not do that. We have taken an oath to say we are not doing the things the same way as we've done them in the past, because if we do that, what we're doing is we're trading and investing with both of our hands behind our backs. We are not going to do that. You and I are not going to do it. Take the oath. You raise your right hand right now and say you promise not to do that. So with regard to commodities, you take a look at these charts here. You can take a look at the GSG in euros and pounds and in yen out there. And right now we have made higher lows inside the commodity sector, regardless of the U.S. dollar index. Steve Rhodes with TFNN. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. One of the questions coming in from our Tiger's Den is from Ruby, who wanted to take a look at the December soybean oil contract out here. And Ruby, if we take a look at this, one of the things that you're going to see on the 60-minute, the 5-hour time frame, the daily time frame, you're going to see those green bars out there. So the green bars are telling you and I that buyers are the ones that have the momentum. Prices trading above resistance. That would be the top of their respective profiles. But then your eyes and my eyes. And then the next question would be, okay, well, where's price going to head to? And that allows you and I to go take a look at the weekly. In the weekly profile, you'll see it's a red bar. And at this stage here, that's really the key level that I believe soybean oil is going to need to get above in order for it to continue moving higher. Now, look, it's trading at 28.21. 28.36 is the bottom of that weekly profile. And if you look at the structure of that box, it is bullish in nature. So 2 weeks ago, 3 weeks ago, I should say, when price closed below that profile level, that was really bad news bears because price should have held, meaning 28.36. It didn't. You saw a move lower last week. You saw a move lower this week at this stage of the game. And right now, if you are long, what you want to be watching like a hawk, and maybe not necessarily today, but certainly Sunday, is you want to see it regain that level. You want to see it close above 28.36. Now, I recognize on a weekly basis, next week doesn't end until next Friday out there, but at least on a daily perspective, you want to see price get above that. So at this stage of the game, we have to say counter trend rally is what is the mode right now, and not until you see it close above 28.36 can we then change our mind. Now, what happens if it closes above 28.36? Excellent question. I know that Ruby was probably asking that. Then you look to that center line of the box at 28.77. That would be your next level of resistance. You clear that, and then it is buyers that are back in control, and you're looking at 30.40. But one step at a time, and we haven't gotten to that step or that set of assumptions just yet. Right now, we know resistance is overhead. We know exactly where it is, and that's going to make it easier. Aaron R. writes in, so many mixed signals today in the metals, miners. In your opinion, should I be long the miners right now? Is the XAU bottoming here? So let's, so you're asking me the question, should you be long the miners right now? And so just to make sure we're clear, I am actually long the miners out there. But that being, that's neither here nor there. You know, I'm going to give you the answer to your question based on looking at the charts right here, right now. So let's do this first. Because of the directional correlation that we have between gold and the mining sector, you and I need to go take a look at gold. So let's do that. Let's take a look at the December contract. What we know about the December contract on a daily basis is that it is consolidating. Right, so it's consolidating. So to a certain extent, Aaron, maybe you could take kind of a neutral-ish type position, if you will. The top of the box is 1214.50. The bottom of the box is 1192. We got down to a low today of around 1202.40. I take that back. 1196. I don't know where the 1202.40 came from. That's what it's trading at right now. So 1192 is the bottom, 1193 we'll call it, and it got down to 1196. So you're asking, should I be long right now? Are you long? If you're long right now, I don't see a reason with regard to the way gold contract is traded. You may not like it necessarily because of some type of heat that it put on your position, but there's no reason to exit it. Not based on gold in dollars and what it's doing here. If you're looking, should you enter the trade? Well, it would have been probably this morning as price got down into that 1196 area out here. But it's just inside a consolidation. Why is gold inside of a consolidation? That is an excellent question. And you and I, we know the answer. We can figure that out. That's the cool thing about charting. We can be just simply as objective as possible. Well, how are we going to figure that out? Well, we already talked about that as we were going into the break. We're never going to trade having our hands tied behind our backs. We're just not going to do it. And what does that mean? That means we have to go take a look at how gold is trading in the major currencies out here. It really is just that simple. So why is gold consolidating in U.S. dollars? Very simply, because if you take a look at gold traders in terms of euros, those folks are sellers. They're sellers. Price is down below a swing point. We got down below the gap down below it at the beginning of the week out here. And at this stage, and taking a look at now, it's a daily time frame chart. Maybe there was some kind of bottom on a 10-minute, 15-minute, 30-minute base or what have you. But the reality is they're still net sellers out here. They haven't bottomed. Price this week closed below a hammer candle from many weeks ago. In the same case in the chart on the very right-hand side, which is traders of gold inside of pound sterling. So those are the folks that are selling inside of gold traders in yen. You know, it continues to make higher lows and higher highs. Made a new high today. We didn't get a new high today in gold priced in U.S. dollars. We did get new lows today priced in euros. We didn't get it. We got a new low yesterday priced in pounds out here. So with regard to this is just simply justifying or helping you to understand why is gold simply consolidating. It's not going to move in with conviction higher or lower until it starts doing it in unison with regard to all of the currencies out there. So then you have to make that decision. Should you be in the miners or not? Now, we can take a look at the miners specifically. Let's do that just simply by taking a look at GDX. GDX is not one of the mining positions that I have. Let's go take a look at the GDX right now. So in the GDX, we can utilize some market profiles. The other thing that you and I can do out here, or we will do, is we can take a look at what some of the individual equities are doing, right? Instead of necessarily just saying, let's go take a look at the entire sector. What do we use to do that? Well, what we use to do that is we use Stevie's black box system. Right? We use Bob, bullish or bearish out here. If you want to go ahead and take a position in the strongest equity, according to Bob, the strongest equity inside the mining sector, well, you'd be looking at Harmony Gold. You can take a look at Stevie's signal on the daily. Its daily outlook is bullish. The weekly outlook is that the bear move, the move lower, is over. So that's providing us with probably the best bottoming signal that we could see on an individual equity. Is Harmony Gold going to lift the entire spirits of the GDX? No, because of its weighting or lack thereof inside of the GDX, right? For the weighting inside there, we've got to take a look at symbols like AEM, Newmont Mining, stocks like that that are in the top 5 out here. But if you were trying to say, hey, I want to take a position, what should I be looking at? What does that mean, Harmony Gold? Why is Harmony Gold? Why does Stevie's system say that is in a bullish mode out here? Well, if we take a look at Harmony Gold right now, here's what you and I know about it. Number one, Price is traded above the top of its box. The top of its box is 180. You trade above resistance. Old resistance should become new support. Well, in this case, that would be level 2 support, because level 1 support is going to be Stevie's red line. It turned green with envy. In the case of Harmony Gold, the real bullish signal came on this trading day. Right, did it perfectly, which was on September 5th. When the red line was turning green, meant that the price oscillator was at 0, and price comes back and tests it and just simply boings off of it. Just a nice, and that was at when price was around 170. Now all price is doing with regard to Harmony Gold out there is just pulling back to support. It's right now you and I know that price level. Level 1 is 184. Level 2 is 180. Go to TFNN. Right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Monday, September 24th, TFNN is launching a new updated version of our website. You can still visit us at the same TFNN.com URL, and starting Monday, you'll be able to experience the new and improved TFNN website. If you're a current subscriber, don't worry, your subscription will be automatically transferred. The new TFNN.com will allow much easier access to all your account and subscription information. Get ready for the new TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So to finish Aaron's question out here with regard to the GDX, let's finish it up by looking at really the mining sector. Let's take a look at the GDX. We can see that it made that Rhodes Momentum Indicator bottom right? Those are the black diagonal lines. You got the confirmation of that bottom on September 13th when it created that morning star candle and price closed above Stevie's red line. You got that second confirmation that this was a bullish move back on September 19th when price closed above the top of its box out here. What we can see is that the pullback that we've seen today, nothing, no big deal. You're always going to have markets that are going to pull back, move higher and lower. This is still trading above the top of its box. It's not as strong as, let's say, Harmony Gold was when we took a look at it, but it still is showing you signs of a bottom. Several signs, really 3 signs out here. 1, the Rhodes Momentum Indicator bottom signal. 2, trading above Stevie's red line. 3, trading above the top of a box out here. So, you know, should you be long the mining sector? If you're still long the mining sector, then yeah. Do you want to add to your position, or do you want to go ahead and try to buy support? Support on this is going to be 1837 to 1790. That would be the support level inside of the GDX. So I hope that helps you out objectively, right? Just the numbers. That's all that you and I are looking at. John in Sarasota wanted to take a look at ticker symbol IIN. And that is Intricon. And John says, is IIN anything to get excited about? Well, it depends on who you are. I would say that if you were a shareholder of IIN back in September 2017 and you had it about $8 out there, I'd be excited. It's trading at $67. So it all depends on your frame of reference. If you bought it at 77 and it's trading at 66, you're probably not too excited out here. But let's see if we can provide some further information to John. So this thing here, this equity this week, what it's done, if we take a look at this little rocket ship out here, is that price pulled back to support. The support level was the bottom of its box at 53.35. The actual low, 53.10. So it's tested it and it's rejected it and it's moved higher. Right now, it's really just consolidation. I wouldn't be in a new position right now because we don't know if 69.50, the top of the weekly box, is going to act as resistance. You're at 66.65. The reward risk isn't there. The reward risk would have been at the 53.35 out there. How do we know that 53.35 was going to hold? Well, we really didn't at this stage here. There's no real, I guess there's an A to B equals CD pattern. Let me just put this in on the other chart. I take that back. Can I take that back? Can I take that back? Can I? I guess I can, but I won't. Here's what it is we know about inside of this. So John, on the trading day of September 19th, just a few days ago, there was a brand new profile that formed, bullish structure out here, suggested to you and I that price would get to 64.11. Well, it gapped up above that this morning, came back and tested that level, 64.11, and that has acted as support. Old resistance, now new support. What else occurred out here in this ticker symbol? It created that Rhodes Momentum Indicator top. We don't have really any bottoming signal other than a Tom DeMark setup 9 count. Why these 9 counts work? They just do. Do they always work? No. But do you ignore them? Absolutely not. So we can see that that formed the bottom, kind of like the exhaustion move, lower. But what price has also done today is it's back above Stevie's green line. So it's looking pretty bullish. But pretty bullish right now says that price is just simply going to go up and at least tag the top of that weekly profile out there, and that's at the 69.50. If you get above that, and by the way, volume, is this thing pushing lower or pushing higher this week? I don't know. I do know that if it closes inside the swing point from September 3rd, the low there is 64.25, well, which had volume, by the way, of 1.9 million shares. We're at 1.9 as we speak right now. So it's really pushing volume with similar or slightly higher volume out there. And if it closes above 69.50, it could be an A to B equals CD to the upside that has unfolded inside of IIN. So you should not be unexcited, I suppose. I wouldn't be a seller of this equity. You'd have to see some other pattern unfold, and I just don't see it at the present right now. Yeah, I guess you could go take a look at retracements, and if you want to be the person that just sells retracements, then have at it. That would be about the only thing that I can see. Jim writes in, so I hope that helps you out, John. And look, for each of you that write in, whether it's in the Tiger's Den like Ruby did, whether it's by sending email requests of things to look at, or certainly by phone, I really do appreciate it. It just makes, for me and doing the show, it makes it more fun, right? Because now I'm providing information, I hope valuable information, to you versus me just going off concocted on something. But, you know, I don't mind doing the concocted going off thing either. But Jim writes in, And Jim writes in and says, Steve, I listened to your show, the segment that you did with Tom on Monday. And on Monday you said, I know what I said. You said if the Dow gets above the January highs out there, that we will not see the lows. And I'm not even reading your email right now because I know what I said. That we will not see the April lows in the Dow again for decades, for a long time to come. Okay, let me see here. What does Jim write? Because I know what I said. Jim writes, okay, so can you share your thoughts with me now? Okay, right? Be like, I guess that maybe it's like be careful what you ask for. Okay, so it's a great question out here. So Jim, here's the deal. Here, in essence, is the chart that I showed, or one of the charts that I shared with everyone. And I did make that statement that as soon as price closed over the January highs, and today we have follow through. So we are above yesterday's high. I don't know where we're going to end the day. So let me just qualify it. At least from a weekly perspective, I want to see it close above 26,616.71, and preferably it close above yesterday's high. And I really want to see that again take place on Friday from a monthly standpoint that says, okay, we don't have a consolidation pattern. That's my only hesitation out here, but it's not much of a hesitation. And in essence, what this chart was taking a look at is, first, let me just change this chart here to a logarithmic scale. So eSignal makes it very easy to do that. And if we take a look at the blue diagonal line out here, that blue diagonal line, which ties into the high of 2000 and the high of 2007, or it's really close to it. I'm not going to change it right now. That is the exact same angular line from 1929 to 1966 that capped the highs in 2000 inside of the stock market. We can take that. We can take that line. By the way, that line also was where the 87 crash found support, and that 87 low, we never saw that again. So the same thing is being repeated here. This is the pattern. You don't have to believe me. You don't have to buy into it. That's fine. I'm just sharing with you. Look, Larry Pesavento taught me to trade what I see. I'm just telling you what I see out here. And so in January in 2018, when price got above this level, that's right here where the blue arrow is, what I was expecting and anticipating was that we were eventually going to see a pullback and a test into that blue line to confirm that in essence the Dow had created its new plateau of pricing, its new level of pricing as it did back in 1987. It never materialized during the entire 2017 time period. Never came back. And then voila, boom, January, the end of January, kind of almost on schedule here, right? In January, you typically see a high. Of course, you typically see a low in the early part of February or the end of January, and we got that high. But price never came back to test that level as it did in 87. And because of rain, everything happens for you. You either believe that or you don't, and I believe it, and I live it. And there was a lot of rain out here over Labor Day. And I sat back at my charts and said, what am I missing? I'll show you what I was missing when we get back from this break.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back. So, Jim, the thing that I was missing, was taking a look at this chart here. I knew that, hey, back in the 1987, or the way that the chart patterns had unfolded, that price had come back and tested this logarithmic trend line out here, and I was expecting the same thing, but kept asking myself, well, every other tool that I was looking at was saying, you know what, looks like we've got a major bottom out there. So what was I doing wrong? And what I determined that I was doing wrong was I said, I need to draw another trend line out here. And so that trend line began at the high in 85, the high in 1987. And lo and behold, when I drew that line, and I didn't know it at the time, but when I drew that line, I was like, well, I'll be a son of a gun. Look at how price was contained in the 1999 to 2000 time frame, which is really what a trend line is supposed to do, right? Support or resistance. In this case here, it was resistance. So then I said, oh, now that's interesting. When I extended the trend line, so you're looking at the full extension of the trend line, then what I noticed was the lows, the correction that we saw in 2018 came right down in essence to that level of support. Now look, we had some, the body of any candles, when we take a look at charts out here, even though I show the wicks, okay, the upper shadow, lower shadow, whatever it is you want to refer to them, it's the body of the candle is really the essence of price out here. And in essence, price was basically testing and testing and testing and testing as it should to see if it could break through there. But the interesting thing was that I saw was like, well, son of a gun. And this is now, right, this is just a few weeks ago. So it was the first weekend in September. And the second, third, whatever it was, right? And I'm looking at the candle session in July. Can you kind of see it? Here, here maybe you can see it. That's a wide-ranging bar on a monthly basis, just simply coming off of that trend line. I was like, oh, my goodness. This is saying, okay, it's over. The move lower is over. Of course, knowing that you couldn't totally reach that conclusion because you never know what's going to happen when equity or anything makes 100% move of a move, right? One of the first things I was taught by Obi-Wan. You just don't know because it can peter out at that stage. That's why on Monday when I did the show, the segment with Tom, and I shared in essence this with you, I said, look, the caveat that we won't see those lows in April is we've got to get above the high in 2016. The reason is because if we don't, it could be a consolidation. And in a consolidation like you and I looked at for gold and something else, you go between the high and the low out there. Well, we got above it yesterday. We got above it quicker than I thought that we would. But we did. It did. It got above it. And today you're seeing follow through. Now, if we see that follow through at the end of today's trading session, this thing could just simply take off. I will tell you that yes, I now firmly believe that, and the only way that I will go against that belief is that somehow price gets back underneath the 26,616 level between now and Friday. I could almost say any time, but I'd have to say right now between now and Friday out there. The other reason why I believe, and look, we don't have experience trading this next style market here, where everybody, not everybody, most people that I hear are talking about searching for a top. It is a never-ending continuation of folks looking for tops out there. Now, you and I know that over the last 130 years, the Dow has always had a Rhodes momentum indicator signal before the beginning of any top, let alone certainly every single bear market out there. So I think we're looking at, or those folks are looking underneath the wrong rock out there. And this thing could just simply go vertical, just simply go just straight up, where retracements are very shallow out here. Now, I'm not saying over the long term that we don't see corrections and we don't see bear markets. We will. They just happen, bear markets every 3 to 5 years out there, corrections every single year, just like the one that we had in January. But what we do have going on right now that is now uniform and across the board, there's not a trader in Europe. There's not a trader in London. Yeah, I know it's part of Europe, the UK out there. Of course, maybe it's not going to be. Maybe they're just going to succeed, but you know what I mean. And there's not a trader in Japan. And right now, there's not a trader in the U.S. Yeah, maybe there's people that are trying to sell these tops, and they just keep getting just pounded like that. It's got to hurt like heck to keep doing that. When what we have going on here is just simply a breakout across the board. Who the heck wants to short this thing? You got to short something else. You cannot short this. If you want to just be shorty, don't do it. There is absolutely no reason. There is just money pouring into this instrument from around the world. Why? I don't know. I guess I know because what traders are telling you and I is they just simply have confidence here inside the U.S. Where's the Dow headed to from here in the short term? If you want to take a look at short term, probably to the top of its next horizontal trading range. Thanks to Bud Rolfs. Bud Rolfs taught us that it truly was the body of the candle that was the essence of price. Because what he always looked at was co-located opens or closes. He looked at the body of the candle. Didn't matter whether the body was an open or a closed. And he looked for the largest number of opens or closes out here. Here, if I put this on a monthly basis, and what he did was he said, where's the largest concentration? And this data here goes back to 1997 out here. So if we go back to 1997, the largest concentration, well, I'll tell you exactly what the number is. There's no reason to not show you the number out here. It's just I didn't have it turned on because it's just another digit out there. But if I take a look at it, the largest concentration is at 10,440, 0.64 if we want to really get, dig down into it. And the second level is at 88.66. All Bud did was identify where those levels were, take that price difference, and then just simply add those horizontal trading range levels out here. And they typically act as support or resistance, just as they did in the 2015 level. The 2015 consolidation was stopping at the 18,310 level until price got through it. Price got through it here back in August of 2016, came back, tested it, and boom, it was off to the races in November 2016. Kind of widest ranging bar. Look at what we have right now in September. I know September is supposed to be a horrible month. Forget about it. It's not going to be a horrible month if all the money is flowing into the Dow. It can't be. Money has to find a home. It found the home. Traders around the world were really waiting for the Dow to get over its highs in dollars to just say, okay, light them up. Let's go on a booze cruise. Okay, it's time to party. In this case here, if we take a look at the next horizontal trading range level, the Dow, as long as it stays about 26,616, it's headed to 27,754. That is not the end of it. The Dow is headed probably to 40,000. That's longer term. Nobody out here is really interested in that. You should be interested. You should especially be interested if you're managing your children's money or helping them to make money out here. Tell them to stay home. Tell them to I don't mean stay home. I mean leave home, but keep your money at home. You kind of know what I mean out there. If we look at the S&P 500 today we made a new all-time high in dollars. We made a new all-time high in euros. Yes, we did. We made a new all-time high today in yen. Yes, we did. We're close. No cigar. We probably get there on Monday. Maybe it's Tuesday inside of pounds. Money is flowing here. I know somebody's going to say, but the NDX 100 is not performing. That just represents your friends and mine, the retail traders, who haven't bought into what I'm sharing with you right now. That's all that represents. They'll eventually figure it out because you'll tell them, I'll tell them. Big party being thrown here in the US of A. You got to love it. Steve Rhodes with TFNN. We'll be right back.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So as we wrap it up, the New York Stock Exchange kind of gets a little bad rap here because it hasn't gotten up to its highs, as if that's a big signal out here. Well, let me give you maybe a bigger signal about the New York Stock Exchange for those of you that just simply love volume out here. Its volume oscillator out here is at a new all-time high as we speak today. That, by the way, is panel number 3. So panel number 3 right here where my crosshair is at is at a brand new all-time high inside of the New York Stock Exchange. Price isn't a new all-time high. It doesn't need to be. What this is basically telling you and I is there's plenty of energy inside the New York Stock Exchange. Now, the confirmation is going to come from that advanced decline oscillator. Right now, it's just hovering at 0. It's at -1, minus 0.98, so just kind of going back and forth. But at the end of the day, it just needs a smidgen more of advancing versus declining issues. It could close above 0. And then if it has follow through on Monday, its message is simply that it wants to keep moving higher. Is the advanced decline line itself at a new all-time high? It is not far from it. I mean, it is really close. That is panel number 2 out here. So it's not showing, it shows such a smidgen of a divergence that it's not worth even talking about that there's some kind of divergence. And the spot volatility index down below the 50-day. So there's just simply liquidity all over the place out here. And we had a question earlier, were there any new profiles inside of any of the equity futures contracts? The answer is no, there's not. There's not any indication that one is forming out here. And the way we would get an indication, typically the way we get an indication is the bars would turn orange out here. So, but that doesn't mean one won't form, but there's nothing on the daily, there's nothing on the weekly for us to hang our hats on. So, folks, thanks again so much for being here. Hey, maybe you don't buy into what it is that I see. That's cool. But I don't want you to do, I don't want you to try shorting this. Don't do it. The topping signals aren't there. I could be all wrong. That's fine. Don't try shorting it. There's too much money pouring in from around the globe, especially in the Dow. Don't think that that's the place to go short, because it's not. Neither is the S&P. Folks, have a great weekend. We'll see you on Magical, Marvelous Monday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.